Greece is looking for a 2-year austerity extension. China is reluctant on reserve cut due to inflation signals. Markets couldn't successfully break higher yesterday. Is it time for a healthy correction? I'm Taylor Schrantz, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. We've had a nice few up days here, but Scott, you know what? We opened up higher yesterday and we failed to close. We ended up coming in a little bit lower. Got a ton of economic data today. How are we positioning ourselves going into trade?
I think yesterday was a little bit of a brushback pitch by the Bears. So the Bulls say, oh, okay, we couldn't break out, we couldn't sustain above 1407. Not the biggest deal, but usually on days like that, when you push through and you play for momentum and you can't find momentum, you sell some stock. You know, the market's had an unbelievable run. We're hovering about 1.5% below the highs of the year. So this is one of those, inflection points where the Bears really have to make a stand, and you really have to like your longs in order to keep continuing along. So, mid-August, I wouldn't look too much into it. I think that there are certain levels to watch to see if they can get any traction.
Well, you made a great point on Twitter this morning in terms of, the equity markets have been really tough, and, there's been a bear case, but guess what? The S&P and the NASDAQ are up really nice for this year, and a key theme we've been discussing all year is tactically trading. And I think you made a great point in terms of there are your spots to pick.
Right. Well, if you're tactical, you could not only be in for the move, you could also create alpha around it, picking the best stocks. Now, if you look at the chart of the S&P, talking about being tactical, yes, we don't like to chase excitement, but we also don't like to fight a trend. And if you go to the chart and you look here, you'll see ever since this June 4th low, we've been following this uptrend, since then. And it's been about, 3 months or so. One time we went outside the band right when Monty came out and started doing his jawboning. And then now we're above the high side. So the question is up here, can you sustain this higher level? So if you take a closer look right here, you will see we tried to break above this 1407, went as high as 1410 and stalled and came right back into this range. So the question is, now that the Bears have a little bit of control, can they break this range? In order to do so, in order for me to add to some of my shorts or get out of some more longs, is we need to break and close below like 1392 to 1395. If we do so, maybe we pull back to the 21-day, which is around 1382. But for right now, it's been a very healthy market, a lot of leaders, a lot of participation. So you don't want to chase a move,
right.
but a lot of guys have been fighting in, and every downtick they finally say they're right. But meanwhile, they missed out on a few weeks of great action.
Absolutely right. Moving along to another trend that Scott and I have been following are the haves and the have-nots. And the retail sector has definitely been one of the haves for 2012. And even within the space, just like tech, there are areas that are outperforming and underperforming. So we're going to kick it off with the have-not, that one being Coach, down about 8% for the year. There's some good momentum trades in here. Longer term, I happen to like it. I think it's at a good level right here. You have that nice yield. You're going to get paid to hold it. But from a momentum perspective, Scott, are we going short here, or are you guys taking a little bit of a nibble?
I think at this point it showed some faulty signs before the decline, so some guys got out of it. Down here after the numbers, people are looking like value. You say long term it could be okay. And if you look at the chart, you've had a decent move off the lows. It's already powered into a portion of that earnings gap, showing you that down here there's some people looking for value. And if you go to the chart, you will see this is the earnings report that took it to new lows. You want to talk red dog reversals? Here you go, right there. I didn't even notice this when it happened. What it did is it went below the recent lows here, 49.05. Went down to 48.24 and then closed strong. So you take a closer look there actually, and that's a great example. So it showed you a reversal. If you weren't involved, here's your entry. And then look what happened since that entry. You had 4 powerful days into the gap. And now it's going sideways, consolidating. I would say at this point that was the easy bounce. Next time for this to get any traction, it's going to have to get above just say 56.75, which is right around here, in order to continue on its way to fill the rest of the gap and maybe see the 200-day. If you're in it and you're long, I would put your stop right below today's low of around 54, because that might mean this bounce is over. But that's a red dog reversal right there. It's flagging. Watch that inside range.
Moving along to one of the haves, not only in the retail space, but in the IPO space. We're going to take a look at KORS. Firing on all cylinders. We reported a great quarter, doing really well in terms of earnings, revenue. You have that brand recognition among affluent customers, and it's really done well since its IPO in December.
Yes, this is finally an IPO that worked.
Yes.
You could have made it money in the first few months. You could have stayed invested, and right now it's back to its highs. And typically in healthy markets, the best winners or the biggest gainers come from IPOs that came public within the last 5 years. Obviously, we're not going to talk about social media because I think all the investment bankers valued them for death. But anyway, something like KORS that was valued right, that has growth and name recognition. You look at the chart here, you will see, look where this thing came public. It came public right around 25. You want to take a closer look here, and here was your entry. You had your 2-day move. This was very, very aggressive entry right there for some traders. And then look at this little downtrend that ignited right there, showing you that this is your buy entry, and then it crossed above that recent resistance. Since then, pow. And then, obviously from a move from below 25 to almost 50, it takes time to consolidate. So with the luxury retailers getting in a little bit of trouble, some people probably went short, some people probably got a little scared, and then all of a sudden, pow, blast off earnings, and look where it went, right back to these highs. So the thing is, what do you do now if you're not in it? So you know my rule, guys. I want to see how much of this gap stays intact. If it can go sideways and keep this gap intact for about 4 to 5 sessions, I do think you're going to get a trade above 49.65, and that'll take out the highs of 50.69. But I would love to see a little sideways rest here, for 3-4 days, and then we get a momentum trade through new highs.
Moving along to another half, we're going to take a look at TJ Maxx. Stephanie Kramer traded this one really well in Actions Alerts Plus. Had another great quarter, 5th quarter of margin expansion. So from a fundamental perspective, we definitely have a story here. What are you guys seeing on the charts?
This one also, it's been in an uptrend. It's been one of the chosen ones. Guys can make money investing here. As a trade, you don't see like much momentum. You don't see wide range bars. So traders don't, I don't hear them always talking about TJ Maxx, but some things are to invest in, some things are to trade. If you look at the chart here at TJX, you will see that, it's been following the 8-day. This was the first time it broke it a little bit, but then, held support, and then it's been methodically going higher. You saw a pretty big reversal yesterday, if this is right, starting lower and close strong. So at this particular point, with a little bit more time, I think it's in the game. The highs here are, what is this, 45.50? That's your next resistance, and that's probably when it can get going. But if, again, you take a long-term look at this thing, it's been an unbelievable investment. A lot of people like the store, a lot of people like the value, and the institutions are behind it. If you want to have a quick high-level stop, you could easily put it at yesterday's low, but at this point, I think that this channel that we've been seeing in this stock since actually late July is intact, and then we'll get in motion above that level we just talked about.
Well, for the entire group, obviously, same-store sales, we're really going to pay attention to that number in September because we're heading into that key back-to-school season, which is just as important as Christmas for these names. Moving along to another half in the luxury department store space, this is where we're seeing names like Nordstrom outperform mid-level peers such as Macy's and JCPenney, which is a whole other story. But let's take a look at Nordstrom.
This one, I haven't traded either, and I look at it, and it's just like everyone hates the equity markets, but you look at all these different stocks that are close to year highs, and it does work if you have a plan. And you look at this chart here, you'll see ever since the lows back in June, July, also just like the rest of the market, it's been moving really well. You've had a trend that's been intact this entire way. It's been riding the 8-day, which is very healthy, and has only tested the 21-day a few times. Now we're back to the old highs. I guess I wouldn't really chase it up here because this always brings in some sellers as you get back to levels where people were trapped. But overall, this stock seems to be chosen. It's riding the 8-day. I think you're a better buyer of it each time it touches the 8-day instead of getting extended from the 8-day. But now the resistance or the pivot is 56.65. I wouldn't just go out and buy it today, but anywhere between 54.09 to 55.43, this would be a good zone to get involved in. If you don't get it, just let it go and let some investors make some money.
All right, let's wrap it up with one of the biggest have-nots of 2012, that being JCPenney. Hey, look, without the Apple X-management in there, without private equity being involved, without that turnaround story, there's nothing here. From a long-term perspective, I wouldn't get involved with this thing short or long or anything. Yeah. There's just no story here.
I just think the media likes to make a story about it
because just like Facebook.
Right.
No story.
There you go. This one has been faulty all year long, and if you look at the chart here, you'll see the excitement came in, I guess, on that news when the executive from Apple was coming, boom, and then once it broke below into this wide range bar and then couldn't even hold half of it, that story was dead. And then you had this big gap down. We talk about gaps. If you can't fill them, it stays in that direction. Huge gap down. Tried to test it again, could not get in there, no value buyers at all, and just kept trickle. I would say technically, okay, you did break this small downtrend. Here's your low. It just looks like very noisy, not a lot to do. But shorts at this point, I think you made your money. Longs, be very selective. To me, it's an avoid.
Exactly, especially the short interest in this name is so high that, I mean, it's just going to trade probably off of that alone. So there's so many other areas that we could put our money to work. We're going to jump into a quick commercial, and when we come back, we dive into the trenches.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Come down and expect to have a great time.
Welcome back to the morning call. We're going to dive into the trenches and take a look at some macro markets with the more macro ETFs. We're going to kick it off with the GLD. It's had the past couple days have been a little bit rough within the underlying. So continuing that downtrend here, or
I think it's still somewhat of like a rubber match. We put our highs in almost a year ago, and since then it's been controlled by 2 different trends. If you take a look at GLD, you will see here is that, remember that red dog reversal we talked about way back when, that was I think in late August of last year. Since then, big decline, came back up, lower high, big decline, came back up, double top, lower high. Then you had that wide range potent bar, that's been controlling this trend ever since. And if you look at it here, this 157, 158, it still can't get above it. Big macro support stands at 148.5, which is holding it. You want to take a quick closer look here. You will see that really, you have a few different, points of interest or action areas, for the bulls to really get this back in motion. It's got to get above this 157, 158, but it's got to do with authority. Like go through it, not look back. On the downside, I think some guys will start shorting it if we break below 154, cheating for the fact that they think it's going to break this 148.5. Because if you go to the monthly chart, you look at this perch, right here in GLD, yes, it looks like a controlled pull-in, but, if we break this support here, you have really nothing all the way down to almost, 120 or so. Actually, you have 140, then you have 120. So at this point, it's all eyes on deck, and just above 158.5
right.
With authority, with volume, with conviction, you buy it. Below 154, you cheat a little short, and then you see how it handles, 48.5.
moving along to UNG, nat gas underlying has been a real big story this year. We've seen a ton of momentum to the upside. There's a lot of liquidity here, and traders like that. I think we're also going to see, from the fundamental perspective, increasing global demand. From the short term, I think it's taking a little bit of a break here.
Well, it just had a pullback, and I know, this isn't my thing, but I've heard a lot of smart arguments that we should be concentrating on natural gas, that we're the Saudi Arabia of natural gas, that we have it popping out of our ears. Some people have more gas coming out of other places, but anyway, this is a viable natural resource. You look at the UNG, and I don't like this ETF. I think it's built to fail. It's had to move off of 14 and went as high as 23. It's just pulled back. It's into some support here. So I think it's at a crucial level here to see whether or not it holds above 18. If it doesn't hold above 18, all this was basically a dead cat bounce. If you look at the monthly chart, you'll see, look at the ride that this ETF has had. Absolutely gross. Look at where it is right now. I don't think it's a viable vehicle. If you're going to trade natural gas, do it through the futures contracts.
Let's take it over, and let's look at USO on the other side. We're looking at some resistance at the 100 DMA.
Yeah, the oil, and this is a little bit different. It correlates a little bit better, but it's still, it's like they just take fees out and it doesn't correlate exactly. You're probably better off also trading the contracts there. But if you look at the chart of oil itself, oil was in a massive downtrend from May all the way into late June, and then finally you had that. Remember that big gap up in oil. Here's where it tried to do a reversal, gapped up and held. So again, changed character right there. This is when, people said, now's the time to look at oil stocks. Oil stocks started really good. We started talking about the oil service names, Schlumberger, Halliburton, you name it. And, all of a sudden, here's a gap, didn't fill it. And since then, it's been like methodically moving higher. Still can't get back to 200-day. I would say, for this to get going again, which it seems like it can. It's holding higher, which wouldn't be great for the consumer. The USO is going to have to get above 35, 37, and then you could probably see a move back to, right where, this big gap starts right around 38, and that means that oil will be higher, oil service stocks will be higher, and the consumer will not be, hopefully voting for Obama again.
Moving along to FXC, the Euro ETF, we're going to see a lot of action in that, especially as everyone comes back from vacation in August. And if VIX futures trading is indicative of that, it's going to be very interesting in September and October. So a lot of September 24 calls trading in those VIX futures contracts.
September 24th. Okay, well, at this point, it's like wedging. You had your move off the lows, it's right at its downtrend, and some type of move is going to happen soon. So this is definitely something that it's going to be on all traders' radars. So if you look at here at the FXC, Jill, great idea to go over this today. Look at this downtrend that you have right here, coming into play since late June. Here is this mini uptrend, so to speak, since the lows put back, on what was this date? This was July 24th. So we're coming to an apex. Question is it going to break higher, okay, and make the dollar go lower, and the market will then probably follow suit, or was this just a dead cat bounce? Because if you look here, where the euro came from, it's come from a hell of a lot higher, and now it's at a lower level inflection point. So there's going to be all eyes on this. I don't know if it resolves before September, because there's all that talk about Germany and the big vote on September 12th, which I'm hearing now is going to be postponed. So who knows? Right now, it's wedging. Let me show you the levels one more time, because I want to look at them one more time, because I got to make sure to track this as well. I would say above, right here, above 123.65, you will see another move, a squeeze higher to perhaps 126. Starts breaking below 122. This downward trend will continue.
All right, and if we're going to talk about the euro, we have to talk about the US dollar ETF, because there's going to be some movement there if we see some movement in the euro.
Yes, they're obviously correlated.
Right.
So look at the chart of the UUP. Here you go. I think this is Keith McCullough's favorite instrument. Here's this, uptrend that's been involved in. You had a big pull-off since, 23. It also, has this, somewhat of a sloping downtrend. It's a little bit more, the angle is a bit different here. So I would say right now, it's trying to hold up. It's trying to hold above this 22, what is this, 22 something or other? 2250. This, if you want to be long this, you'd be long versus this, but if it starts breaking below 2250, you could easily see it move back down to the 2240 area, and that means that the FXC is probably breaking higher. If you want this to start breaking and getting back in vogue, it's going to have to get above 2278, 2280 in order to get back in motion and break this trend. So again, I don't think you need to guess a direction. Wait for it to resolve and then jump on, but be prepared with those levels.
We'll have to throw the growth slowing hashtag into the Twitter feed in honor of Keith today. Clearly that's something that he's on. Let's move along to quick hits for some quick cash. We're going to kick it off with our favorite name to trade, that being Apple. September 21st, we have that iPhone 5 coming out, and we're heading into that key back to school season. We'll have to see if it can continue with the momentum it's been on.
Yeah, well, it's had a big move. It missed on earnings. It was down 30 points. It hung around for 3 days, and then it triggered. If you look at the chart here, I just want to go right through it. If you follow me, you know exactly what I'm talking about. After this big gap down in earnings, it held a big support. It couldn't break below this 570. So what did it do? It broke into the gap and traded above 580.80. Since then, big 3-day move, held higher. This is when I started getting involved for a swing trade. You could have added here, added there. I actually sold yesterday the majority of my Apple, and I announced it on Twitter, and guys were real happy. Like, wow, not a lot of people say when to buy it and when to sell it, and it wound up being a decent reversal here. A tail like this, to me, is a day to take notice. It's always when sellers take over control from buyers. Doesn't mean it's game over for Apple. Right now, watch yesterday's low, 630.21. If it breaks below that, you could see it move down to the 8-day, 624. This is where I'll look to see if I could put back, a decent amount of size. And if we do get some kind of market pullback, if we pull back to the 21-day in the market, this is a huge, huge level in Apple. This will be about, 614, 615. So here you go. You have yesterday's low as a pivot. You have support 1 and then support 2 area, and I'll be watching it very close.
All right, moving along to Google. We actually have a straddle on in this name and options profits. We've been trading over the past couple months, doing really well with it. Implied vols at some all-time lows, and we're starting to really get some momentum in terms of the price to the upside. Scott, what are you guys doing with this one?
This one I just sold yesterday. I actually didn't get in for the swing trade because I was training for the Ironman. I didn't want to have too many positions on.
By the way, congratulations. Awesome time for you.
Thank you very much.
12 hours. That's awesome.
Yeah, special, long day, but thank you. Anyway, you go to Google, you'll see that, you had 2 misfires. This was one earnings. It missed, held support, and then it actually missed again, but look at the support that held. Institutions were accumulating it. So on this earnings, finally it gapped up and held. We talked about it off the charts. We talked about here, your buy should be 620. Then you had an add right around here, around 635. Then finally, on that Morgan Stanley news, some traders got involved when it showed a lot of relative strength around 651. That's when I bought it. And then I closed it out yesterday around 670. If you look here, it's right at the highs. I don't think this is going to be a double top that controls the stock, but I'd love to see some type of digestion, some type of sideways move, because then above 670 and a quarter or 670.72, you're going to see another explosive move. And the reason why I named this my high beta stock of the year is because of this monthly chart. We put a high in Google right around 747 back in July when it only was search. Now we're talking about 5 other businesses. It's just starting to break above resistance here. If we get a monthly close above this 675 area, you're going to see 750 come most likely before December.
Right, and what we have on is a straddle, so we're kind of playing the applied volatility, where it's not more of a directional call. You win if it goes either way. So
well, how about this? Save some money and just buy calls and do some kind of call straddle. What is it? A vertical call spread?
If you're bullish on it, but this one we're not playing direction, we're playing the implied volatility movement. Let's move along to eBay, one of our Action Alerts Plus holdings. This one's doing really well too. Doing great with same-store sales because we've seen retail same-store sales improve. You also have some speculation in there with the PayPal spinoff, so we've seen some nice upside momentum in this.
Yeah, 2 quarters ago, it gapped up on earnings, and then it consolidated for a while, for a long time before going, and then this quarter gapped up on earnings, and it's also having a hard time getting traction. If you look at the chart, for an investor, it's been great. This was the gap up 2 quarters ago. It was definitely choppy within this range here. It tried to break out and failed. Okay, so it gave you a trade, a 2-day trade, but then it didn't hold higher and came back to the low end of the range. Now you gapped up again. This time we've been telling people, buy some versus the low, just so you're in it if you're not in it as a macro investor, because it's been very hard to find that trade where you get a breakout. Like it tried going yesterday and failed, so some traders are probably a little upset by that. You didn't get quite the 2-day move we got way back in June, but for right now it's still in a channel. It's a great stock for investors. You go to the monthly chart, it's broken above levels, it's following a nice trend, and it's the next big level of resistance here from way back when is about 47.86, so it's got some room to get to 50, 55 this year.
All right, let's wrap it up with AIG. This was a Barron's feature this weekend. They seem to be a little bit bullish on the CEO and what he has in store for this company.
Yeah, Vicky, who helps me with a lot of my work, she called it out. She had it off the charts. I actually tried to trade it that day, and it was so choppy I wound up losing money. But it just goes to show you how you could have a good trading idea, and if you don't believe in it, you're not going to stick with it. You're not going to make money with it. And I hate the company. Actually, I shouldn't say that, because who knows? Well, who am I to hate a company? Or I hate trading it lately. So anyway, if you look at the chart, you will see that it broke above this area. The reason why we listed it because we love tight patterns. And look how tight this pattern got. That's what we look for as a trader. The number was 32.70. I bought it a few times. It was a weekday. Didn't work for me. You wound up getting you 2 days to people who gave it a bit more room. And that's what's working this summer, giving things room, not trying to be precise, but you have to believe and have the conviction in your idea. So with that said, nice move back to the highs here. And at this point, it's been pretty nice run for AIG. And I think that some investors are going to continue to stay the course. And just something I want to touch on, because we made, it's nothing to make fun of. Like, the growth is slowing around the world, and that is a thesis, and it's true. Okay, some people focus on the headlines and what's going on, and some people focus on the price action and the charts. And for me, from my way of thinking in my school of thought, is I look at the price action, and I need to know what's going on in the world, so how the market responds to it. There's a lot of smart guys out there, and I can't take anything away from any of them. They all have a successful process. They work really hard, which is great, and I support everyone out there. But everyone has a different style, different process, and just pick out which one works for you. All
right, guys, have a great week, everyone. I'm going to be in Chicago the next couple days, getting some great content for us next week from the Ag Pits and from the SPX Future Pits. We'll have some good stuff for you next week. Catch Scott at the end of the day every day as he wraps up the charts for us on Options, Profits, Real Money, and T3Live.com.